Hello friends, I am Tarandeep Singh. Today we will talk about loans against property. It is again a function of a bank wherein we get a loan pledging our existing property, which could be a house, owned house, a commercial building, plot. So, what is loan against property? A loan against property is a type of loan which is taken by pledging or mortgaging my existing property with the bank. And the very interesting thing about loan against property is that bank usually does not ask the end use of the loan given, as it is a secured loan. But in some cases, bank may ask also whether this money is going into a risky proposition. So they may not lend you even if you are mortgaging your property. But still, by and large, bank usually does not ask the end use. So I can use this money. You can use this money pledging your existing property for expansion of business, for buying a new machinery, for your own need, for your child education, for your daughter education, for your own personal need, your wedding, etc., etc. So, what are the properties mortgaged by the bank? So, basic properties, there is a very specific category of mortgaging a property, that either it is a residential property, either it is a commercial shop, commercial complex, either it is a proper plot having in a regulated walls, in the sense that it is a some government developed authority plot, any commercial property, office building, mall complex. And also there is a you can lend so rather you can pledge your property which is already given for a rent to someone else. It could be a commercial property also, or a residential property also. So how does security is created in pledging your property? So very simple. Bank usually does the unregistered equitable mortgage for the property. Likewise, I will put an example, like your home is valued at 1 crore rupees. So bank is okay to give you loan of 60%, 65% on the residential property, and they normally charge equitable mortgage stamp duty charges on it. So you need to put up the original registration papers of your property with the bank. So bank keeps those papers with them till the time loan is run. So as I said, purpose. So purpose is not defined, but it is a need based. Again, I can use this loans against property for business enhancement. You can also use this for education of your child, some further property buying for a business need, any repair renovation required for that commercial property, any new commercial property you wish to buy. Or it could be also taken to repay your existing loans, to consolidate your loans, etc. So as I said, bank usually do not ask why you are taking this loan, but still there are restrictions put by the bank that this money taken pledging your property cannot be invested in equities market, because it's a speculated business and bank may feel a risk on it, so you should not do it. And this facility is also not available for builder developers, who in turn put their money further into the business of developing a commercial entity or building a residential property. It is again a speculative business, because once the flat is sold, only then builder realizes his money. So there is a long-term risk involved in it. So bank usually does not lends to builder and similar profession people. So while bank approves you this loan, so they take a suitable declaration also whether you are investing all this money into property development or any equity investment. If you declare it in equity investment, they may reject, they may decline your case. So I suggest that we should not do this. So who are eligible customers? So eligible customers are proprietors, ship firm, partnership firms, private limited firms, individual earnings, HUF excluding partnership firms, societies, staff member, NRI, as per classified as per RBI or bank regulation. Self-employed individual or doctor can take or an architect can take a loan. So who are ineligible customers? So ineligible customers are NBFCs, trust, society. They are not given any loan on it. So if I am running a school and it is run by a society, bank may reject that loan immediately, citing the reason. So there are what do I say, the characteristics of this loan, that this loan is given up to a age restriction. Like I as an individual wish to take a loans against property, so bank will not lend me beyond 60 years tenure to me. So tenure, if I am at age of say 45 years, 50 years, so bank will only lend me for the tenure of 10 years. So beyond that they will not lend. So it is for a self individual earning. So for self-employed it is 70 years. So bank may lend the loan to me for 15 years, for 18 years. So while pledging the property, mortgaging the property, I may request bank to give me a term loan. I may request bank to give me a overdraft against it. As I require, I can use it. So overdraft facilities, further there are customized product available with each and every bank, so that this overdraft facility automatically get reduced also, or basis request it is reduced on year to year basis. So how does the margin or loan value is calculated? As a thumb rule basis, as I said, my property is valued for 1 crore of rupees. So bank will only lend me 60% of the market value. So 40% is the safeguard methodology adopted by bank in terms of property rates may decline due to any reason, due to demonetization, due to natural calamity. So bank need to create a gap that whenever this loan is going bad, bank money is saved in the sense, they whenever they do a distress sale, they at least recover the loan amount given to the person, individual, or a business entity. So repayment terms, normally it comes as a term loan or a longer period loan. So bank usually give 5 to 10 years to 12 years of tenure to repay the loan, and it also depends. I can foreclose that loan in between also if surplus funds are available with me. So overdraft facility, as I said, there are products with the bank in which overdraft is reduced over a period of time. Every year 10% to 15% it is reduced, and after say while my tenure is finished for 10 years, my limit is zeroized at a very 10th year. So there are products available like that also. There are pure overdraft product also available, where you need to only serve the interest of the used money. So normally, while a term loan or while loans against property is processed by the bank do give you insurance on the property mortgage. So it is also advisable to take this product. You should not deny it to the bank, because it See, as I said, you cannot control natural calamity, you cannot control any riots, civil commotion, etc., etc. So your at least earthquake, as I said, at least your money is saved through insurance. uh, God forbid if earthquake comes, your property gets damaged, so how do you pay? It is a commercial property, it gets damaged, how do you pay? You will not be able to pay, so the insurance will recover the amount due to the bank. So while bank processes the loans against property cases, it requires a very basic documents. You bank asks for your KYC document, your income documents. If you are salaried, you need to give your salary proofs. You are sole proprietorship firm, so you need to give your ITR, partnership ITR, private limited ITRs, balance sheets. At times, employer identity cards are also asked. Bank statements are asked. Last 6 month bank statement is required. Form 16 if I am a salaried person. So for a business also, as I said, you require a proper 3-year balance sheet with the profit and loss statements, copy of your KYC documents, your firm 6 months bank statements, property documents. So the need of loans against property, as I said, is not predefined. So you, while whenever you wish to take loans against property, you can set your own need, why I require it. So you are comfortably able to tell your bank that this is the need why I require loans against property, and bank is also in return able to justify your need through the proper documentation, valuation of the property, and fulfills your requirement. So that is all from me. Thank you very much and wish you all the best.